Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. A weak day of trade, of course. The momentum that we saw, in the second half of the session yesterday completely fizzled out. In fact, we started the day on a positive note. But towards the end of the session, we broke below that 22,000 mark as well. And as we head into the monthly, expiry day, the setup is not looking all that great. 21,000. 950 or thereabouts, in fact, 920 or thereabouts, that's where we've shut shop today. 21,950 taken out, so looks like pretty negative as we step into a monthly F&O expiry. Near the low point of the day, so to say, and all the sectors were, trading in the red today. If you look at the Nifty Bank Index, down somewhere around 1.5%. You have autos, shed 2%. Realty pack was, feeling the blues, 2.5% kind of losses coming in there. Even the PSU banking pack, for that matter. All the sectors, of course, trading in the red, and it was the mid-cap end of the markets that was bleeding. So the Nifty mid-cap index, shed somewhere around 2%. Even the small-cap end of the markets, saw some bit of selling, 1.5% kind of a cut coming in there. India VIX saw an uptick of nearly 4%, so volatility is increasing, and of course, the fact that we were holding on to 22,000 mark, of course, we have broken below that crucial level as well. We'll have to see what the next support really is for the Nifty. And if you look at some of the losers today, Power Grid, top Nifty loser, 4.5 kind of a cut coming in there. Apollo Hospital, Bajaj Auto, Eicher Motors, Maruti, so all these auto names under pressure. Asian Paints continues to, log losses. I think over the last 4 to 5 sessions, it has lost more than 7 to 8%. Gainers are few and far between. HDFC Life, TCS, Infosys, so some of the tech names holding out. HUL was among the gainers today. Airtel and SBI Life. Of course, among the mid-caps, Vodafone Idea, this particular counter shed somewhere around 13% or thereabouts, despite the board nod for fundraise of somewhere around 45,000 crore rupees. Of course, analysts believe that this may not be enough to turn fortunes, but of course, we'll have to really see how this whole thing pans out. But aside of that, HFCL, another one that lost 7%, Infibeam, Motilal Oswal, PNC Infratech, Z Entertainment, another one that cracked 7% or thereabouts, and KFin Tech, that stock was also down 6% or thereabouts. On the flip side, you have Rainbow Child, that stock was up, top Nifty 500 gainer. You had Aegis Logistics, Havells India, yesterday that stock hit a fresh 52-week high, extending gains, 4% uptick coming in there. Pfizer, Max Financial, Vedanta, Fashions were some of the other stocks that were among the gainers on the Nifty 500 index. Breadth extremely weak. Last time I checked, it was, advanced decline ratio on the NSE was 1:6. So one gainer for every 6 stocks losing. On that note, let me bring on board my guest for today. Joining me is Nilesh Jain of Centrum Broking, as well as Nirav Karkera of Fisdom Research. Gentlemen, great to have you this afternoon. Nirav, coming to you first, what do you really make of this correction, especially in the broader end of the markets? In fact, towards the end of the session, industry body, there was news flow that industry body AMFI has written to MF trustees, and they've said that there is froth building up in the broader end of the markets, in the small cap and mid cap space, and there should be some kind of investor protection policy in place to shield investors from any extreme drops or moves in the broad end of the markets. Do you think there's a cause for alarm, given the fact that mid caps and small caps have run up quite a bit?
So, hi Nandita, a pleasure to be chatting as always. So, a very interesting phase has been developing in the mid cap and small cap segment, because the run up has been compressed within a rather narrow time period. The uptick is seeming really steep. However, I feel that there are still pockets of opportunities, but of course, at a broader headline level, there is, from a valuation perspective, there is a lot of concern. If not overvalued, it is at least richly valued at this point in time, or at least not fairly valued at this point in time. So, and this has caught the attention of the regulator as well. So, and last I'm aware about is that AMFI has also written to the AMCs to put in policy and a process in place to ensure that the risk involved in mid and small caps is effectively communicated to investors. Over the past couple of months and quarters, the steep run up in mid cap and small cap has attracted a lot of retail inflows, which unfortunately has been on the back of recent performance and falling prey to the recency bias. So we believe that although it is not exactly an investor protection sort of a policy, but it is more of a disclosure and an investor education sort of an initiative that will be executed, and that is underway right now by all AMCs to ensure that the investors are really sure of what they're getting into.
Right, Nilesh, getting you in as well. Yesterday when we spoke, we spoke about how the setup was looking positive as we step into a monthly expiry, right? But of course, 250-point cut coming in on the index. We've broken below the 22,000 mark that was being looked upon as a crucial support zone, right? Here on 21,900, would you be working out? Would you be working with that figure when it comes to the next support level? And of course, the expiry around that 22,300 mark looks a little far-fetched now. What would you say?
Hi, Nandita. So yes, yesterday we discussed about the volatility index as well, which was trading at elevated level, and today as well we have seen some spike in the VIX. So that is certainly showing that the volatility is likely to remain high, and we were expecting a big move. That is what we have seen today as well. Now, good part is that after today's correction, the Nifty index has come down to its 21-day moving average, which is placed at 21,930.11, and exactly at those levels we have seen Nifty has found support and manages to close exactly at those levels. Now, for tomorrow, we have a monthly of an expiry for the Nifty and Bank Nifty. We expect Nifty to oscillate in the range of 21,800 to 22,200. Reason being, today we have seen huge amount of OI addition at 21,800 strike on the put side. At the same time, call writers have got active at 22,200, and we have seen unwinding of the position from 22,000 put strike. So clearly, looking at the data point, we expect Nifty to find support near about 21,800, and it is likely to face resistance near about 22,200. So that's precisely 400-point trading range for tomorrow.
Right. Of course, that's the trading range for tomorrow. How are you positioned really heading into the expiry, monthly expiry now, Nilesh?
So as of now, see, the positions are slightly on a negative side after today's fall, and specifically the fall that we saw in the mid-cap and small-cap index. So that has been vulnerable, and we expect a follow-up move in the coming trading sessions as well. And from here, we expect further rise in the VIX, which has given a fresh breakout today, and it is likely to move towards 17 levels. So that is certainly not a positive sign. So that is a cause of concern as of now. So looking at the so far the rollover data that are not quite promising, and we expect slightly lower rollover compared to the previous month. And as far as levels are concerned, as I mentioned, we expect slightly sluggish expiry. But yes, some pullback on the back of short covering that cannot be ruled out. The narrow range could be 21,800 to 22,000.
All right, that's the view then. But coming to you now, Nirav, the NSE Index Committee is slated to meet post-market hours today, for the periodic review. And there's a lot of buzz around the inclusion of Shriram Finance in the index, right? What are your chances? What do you think? I mean, are the chances high of Shriram Finance making an entry? And of course, there's a lot of buzz around UPL also exiting the index. Your thoughts here?
So while the committee will of course take a final call, a mathematical guesstimate would be positive towards the inclusion of Shriram Finance. I feel the probability is higher in the case of Shriram Finance. Of course, UPL also has a fair shot at it. So anything at this point in time is well-educated mathematical guesstimate. But if in terms of probability, I'd say it's pretty high in favor of the inclusion.
All right. Of course, the stock of the day, Vodafone Idea, board has approved a 45,000 crore rupee fundraise plan. But the stock, of course, the top loser on the Nifty 500 index. In fact, brokerages are a little divided, right? They've maintained their sell call, and they've given a target price of 6.5 to 7 rupees or thereabouts on the stock. In fact, Nomura has said that, Vodafone Idea may not be fully out of the woods, given the fact that it has missed the bus on 5G rollout as well, right? Aside of that, Jeffries has in fact said that Bharti Airtel is in a better position given the fact that Bharti Hexacom may see higher market gains given its superior execution as well as Vodafone's weak positioning. Of course, Bharti Airtel, Street is a little more tilted towards this stock in the telecom space, but given the news flow around Vodafone Idea and the fact that according to CNBC TV18 sources, the company is looking to raise funds via a follow-on public offer or preferential allotment. Do you think this would turn or would help Vodafone turn its fortunes, or do you think there's still a long way to go?
So many facets to this development. We'll probably pick it quickly, but one thing at a time. So the fundraise so far, the 45,000 crore, it may not be really adequate, and definitely not adequate to take Vodafone Idea out of the woods yet. There's definitely a long way before Vodafone Idea revives itself. So, so the amount is inadequate in itself. And like you rightly pointed out, it has missed the bus on the 5G rollout, and not just on the 5G rollout. In fact, one could extend it to the variety of other products and services. In fact, it has missed out on quite a whole, comprehensive suite of product and services that, probably the closest comparable peer, Bharti Airtel, has been really doubling down on and gaining more and more market share within, right? It's not just the 5G, but also all the other ancillary products and services along with, normal, 5G. This could include the likes of bandwidth as a business, etc. Right. So over there are quite a few concerns. And apart from that, the ability of Vodafone Idea to recover lost market share that it has already conceded to other players like Bharti Airtel and Reliance Jio is going to be a tough climb ahead. So on one hand, when you have your financials really weak, you miss out on the product and service suite component, and then you have been conceding market share to other competitors and formidable other players who have been doubling down on their multi-product selling strategy. They have been cross-selling and upselling at quite a rigorous pace. It will be very difficult to claw back any of such lost ground and regain any part of such market share. So going ahead, we believe there was a bit of exuberance and expectations that that was factored in before this fundraise plan. It was supposed to be a huge event, but there was some bit of disappointment there. But we would say that the sharp decline that you see is merely a correction of the euphoric anticipation that had built up over the past couple of weeks. It's not as if the prices were flat and it's a decline from there. It has just reverted to something that it was originally stabilized around. But yes, going ahead, the path seems really tricky. I feel in the future of Vodafone Idea would rely on two things: plans of additional fundraisers. That's one on the financial side, and two on the business side. How fast and effective are they going to ramp up their product and service suite and distribution of the same? These two will be pivotal to the future of Vodafone Idea, which right now, is not in the most healthy shape in terms of expectations, at least.
Right, not in healthy shape in terms of expectations. But on the charts, Nilesh, what is the next support level you'll be watching out for here? Because right now it's at somewhere around 13.5 or thereabouts. Chances of it slipping into single digits. What are your thoughts?
So Nandita, today we have seen some sort of a structural breakdown where it has broken its 21 DMA, it has also broken its 50 DMA. Both were placed exactly at 15.2 level, which is likely to act as immediate resistance now. Now, as far as the next support is concerned, 11.2 is the next 200-day moving average major support, and that is likely to be tested going forward. So from current level, we can expect another follow-up move on the lower side, which will open downside towards 12.5 to 11.5. So that's the range we are eyeing on as of now. Today, we have seen a good price and volume action on a lower side. So this is currently a structural breakdown. We expect further downtrend to continue. It is better to stay away from the time for the time being. Within telecom space, we have our coverage on Bharti Airtel. So we are liking technically as well. This particular counter looks strong for further up to continue towards 1180 to 1200 sort of target on the upside. Can be added at current level, can also be added in a staggered manner. One can keep a stop loss below 1090 for the long positions.
All right. Well, another stock I want to talk to you about, Nirav, Vedanta. There was an analyst meet yesterday where the management has guided for debt reduction to the tune of $3 billion by FY27. And of course, we had a brokerage report from CLSA where they've upgraded the stock to underperform from sell. Of course, there's, deleveraging also happening at the group level, and, capital allocation, corporate structure. These have been focal points, right? But do you think there is hope of resurrection here in Vedanta, given the kind of steps that they're taking? Also, improvement in operational parameters, that will be the key for re-rating. That's what CLSA has maintained. Your thoughts on, where things are headed for Vedanta right now?
It is hope, right? So considering the pivotal juncture that Vedanta is at right now, one can only hope that all the actions are aligning with their plans. Of course, deleveraging is a beautiful thing for them at this point in time, and operational efficiency is something that they have committed to, and of course, the intent is in the right place. They have been working, and it's not just now, right? It is an update that has been given in the analyst meet. However, the restructuring of their entire capital allocation strategy, their overall corporate structure, and the entire operating efficiency mechanics has been worked upon since quite some quarters now. The commitment has been coming through since quite some time now. So no surprises there. I feel there's a lot of hope that is pinned on the final execution and the effectiveness of such a execution that will warrant any sort of re-rating on the stock. I feel at this point in time there is some bit of anticipatory relief, that if the management appears to be so intent and committed to reviving it, there will be at least some positive impact. I feel one important thing to be on the lookout for. So, of course, the probability of a positive impact is really large at this point, considering a favorable base from where they're starting. Any improvement is going to look like very good improvement. But I feel what we are on the lookout for is a material improvement that reflects in its cash flow statements and its income statements, especially the operating efficiency bit that you spoke about. It needs to be translated into much more effective margins and at least some visibility on margin stabilization, if not expansion, at this point in time.
Right, and also Nirav, thoughts on Asian Paints. The stock has been on a downward trajectory, and we saw Birla Opus come into the markets, and the scale has really taken a lot of people, a lot of analysts by surprise, right? Even though Birla Opus was aiming for the number 2 slot in the paint sector, Asian Paints is unlikely to be unscathed, so to say. Of course, given the scale and the revenue targets, if you look at that. So Asian Paints, do you think, is there any chance of a pecking order change in the paint sector?
Right now, I would say it's too early to comment because Opus has not really expanded its operations. Everything right now is in terms of a roadmap only right now. And as you said, they themselves are trying to position themselves well enough to quickly capture number 2. I believe the reaction that we saw in Asian Paints has more to do on the back of it conceding some market share. So irrespective of whether the pecking order changes or not, there will be a tilt in the weightage that Asian Paints holds in the sector right now. Right, there will be some market share that can be expected to move towards Opus. It'll take some time before we actually get a number for what's the kind of market share that it finally concedes. And a lot of this has to do more with the rollout and actual penetration and distribution of Opus products and the uptake of the product than it has to do with Asian Paints. I feel at this point in time, Asian Paints is in a market share defending position. Of course, we believe that Asian Paints will get into whatever it takes to defend its market share and competitive pricing, etc. will form a part of this textbook play. Almost, it's going to be textbook. But I do not, given whatever information we have right now, and I don't really expect the pecking order to change. However, the weight on the leaderboard for Asian Paints will slightly reduce. That wouldn't be very surprising.
All right. But Nilesh, coming to you then, what are the stocks that you'll be keeping on your radar as we head into the expiry, monthly expiry tomorrow?
Right, Nandita. So we are focusing on a few cash ideas. So one is delivery. So that is on our radar. So today we have seen a small recovery from the lower levels. Yesterday there was a breakout in this particular counter. Somehow today it managed to close above the same, and the structure looks positive for 485 to 490 sort of target on the upside. Stop loss can be placed below 462. Another stock that we are liking is KEC International. If you look at today's volume activity, roughly around 29 lakh volume has been added, and it has given a good price and volume breakout. From here, we are expecting KEC to move to a new record high, which is somewhere around 740 levels, and the upside is open for 760 to 780. At current level, it can be bought keeping stop loss below 710. So KEC is another stock that is looking positive on the chart.
All right, those are the stocks to keep on your radar, according to Nilesh. But lastly, coming to you, Nirav, of course, after today's correction, one could say that this could present a buying opportunity. So, what are the pockets that are looking interesting that one can, consider buying on dips?
So, very interestingly, towards the start of the show, you spoke about a few sectors that were most bruised and battered. I feel one segment that most of us are not talking about is media. I feel that as a segment must be looked out for, and if I'm not wrong, it has been among the worst battered segments today. So that is a pocket that one can keep looking at. And apart from that, I feel in terms of sector with selective plays, I feel energy is a very good pocket. We must take a closer look. Of course, in both pockets, the opportunities are very selective, and it's important to do a very thorough due diligence. However, in terms of valuations, I feel there could be some opportunities in the media segment, some in the media pack there, and from a growth perspective, we could see some structural uptick in some of the energy plays listed.
When you speak about energy, at least for the oil PSUs, oil marketing companies, IOC, HPCL, BPCL, the street is very divided. One section is very bullish, sees more room for upside. There's another section that says that, valuations are running ahead of fundamentals. Which camp do you really belong to?
So I feel I belong somewhere in the middle. I feel it's a part of a structural upcycle. And, in the longer term, I'm really positive on this pack as well. However, one needs to be conscious about the valuations right now. So it may be a good play, but maybe not at the most ideal, prices. So probably wait for earnings to catch up a little bit more, before I start looking at it much more favorably. So probably somewhere in the middle, long-term positive with some caution for current prices.
All right, caution, that's the word when it comes to OMCs. But with that, gentlemen, completely out of time. Thanks a lot for taking out time this afternoon and joining in and sharing your thoughts with us.
Thank you.
Well, with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in, but of course, stay tuned because coming up, stay tuned to Moneycontrol for all your other news and updates.